Market falls from the highs of the day while the Nifty slips into the red. Metals and utilities are the top gainers while IT and financials are soft. The broader markets are seeing deeper cuts.
India's #1 e-commerce player Meesho sees a bumper listing opening at a 46% premium to its IPO price. The street values the retail platform at over 77,000 crore rupees.
Swiggy floats a QIP to raise 10,000 crores in a bid to raise up bids for competition with peers. Eternal already well funded. The food delivery to quick commerce player raised 4,500 crore rupees through an IPO in November last year.
Silver gains 4% overnight to score an all-time high, spelling a gain of 111% in 2025. Copper too stamps a new high of $11,770 per ton, registering a gain of 34% in the calendar year.
And Adani says it will invest $35 billion till 2030 in India on expanding its footprint and AI enablement in the country, while Microsoft commits $17.5 billion to help accelerate India's AI adoption. Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Hormuz Fatakia. With me as always, Arundhati Ramanan. Arundhati, good afternoon.
Good afternoon, Hormuz. What a day it's been. I mean, the market's coming off their highs and, clearly in the red now.
Just no conviction at higher levels, right? And that's been the story over the last few trading sessions. The Nifty now back into the red. Still holding on to some important levels. Yesterday's low, 25,728. Today's low around about 25,770. So still around about those levels, managing to hold on that 25,750, 25,800 zone. We spoke to a lot of experts who have also mentioned the fact that 25,800 is going to be a very important support for the Nifty. And we also go into the Sensex weekly expiry tomorrow. We have the Fed decision tonight. The global markets are on the edge. So there are a lot of moving parts that the market needs to digest. And as a result of which they continue to remain slightly lacking confidence at higher levels. But the broader markets is where the actual pain lies, right? The mid-cap index is now down, almost 600 points off the highs of the day.
Absolutely. Broader market seeing more pain. But even if you take a look at that advance decline ratio, right, still in favor of the advances, 1463 for every stocks advancing for 1,395 stocks declining. Those lines kind of merging now, but batting for the bulls is that metals pack, right? If we can bring it up for you. Hinzing, Hindalco, Vedanta, all of them seeing big gains between 1% and 4% in the green. But, on the losing side are those PSU banks, which were up in trade yesterday, but now is one of the top losing indices today. Bank of India, Indian Bank, Bank of Baroda, all of them strongly in the red. The IT pack is the top losing index today. There were also 3 new stocks that listed on the bourses today. Meesho seeing a stellar debut listing at a premium of 50%. And there was Equius as well, that listed at a 13% premium. So a lot of action there on the new listing front, right?
New listings indeed, and that's been the markets may be quiet, but the primary markets are anything but quiet, right? We have had 3 listings today, 2 IPOs are closing for subscription today, and 2 new IPOs have opened today. In fact, the Nephro Health IPO has now become the 100th issue of 2025. But sticking to new listings, the big listing of the day, e-commerce unicorn Meesho made a bumper debut, as Arundhati was just mentioning, listing at a premium of nearly 50% to its issue price, currently trading with gains of around 53%, listed at 162.5. Earlier in the day, we spoke to the management to know more about their future outlook. Listen in.
I think on the path to profitability, as we have kind of been mentioning, we foremost focus on free cash flow as the metric that we look at. I think over the last 2 years, if you look at it, we have been free cash flow positive. Last year, we generated close to about 1,000 crores of free cash flow. If you include interest income, excluding interest income, about 600 crores. So I would say that the way we have also built our business has been disciplined in terms of capital efficiency and capital discipline. And I think as we continue to make more progress on some of our monetization levers, be it ads, logistics, some of the new ones that we are working on, we'll keep making more progress towards our other profit metrics as well. I think on the path to profitability, as we have kind of been mentioning, we foremost focus on free cash flow as the metric that we look at. I think over the last 2 years, if you look at it, we have been free cash flow positive. Last year, we generated close to about 1,000 crores of free cash flow. If you include interest income, excluding interest income, about 600 crores. So I would say that the way we have also built our business has been disciplined in terms of capital efficiency and capital discipline. And I think as we continue to make more progress on some of our monetization levers, be it ads, logistics, some of the new ones that we are working on, we'll keep making more progress towards our other profit metrics as well.
And another key event for the markets to watch will be those India-US trade talks. And the latest round of talks between Indian and US trade delegations have begun in New Delhi. Deputy USTR Rick Switzer and Assistant USTR Brendan Lynch are in New Delhi for 2 days. Parikshit Luthra joins us now with more on this. Parikshit?
Talks between Indian and US trade delegations have begun in New Delhi. Deputy USTR Rick Switzer and Assistant USTR Brendan Lynch are in New Delhi for 2 days. They will be meeting Commerce Ministry officials in Delhi. The Indian side will be represented by Joint Secretary Darpan Jain. Rick Switzer is also expected to call on Commerce and Industries Minister Piyush Goyal. Ahead of this meeting, the MEA has said that the Deputy USTR Switzer has recently taken over, and this is therefore a familiarization visit for him to meet Indian officials. The MEA further said that both Indian and US officials are engaged in discussions to conclude a fair, balanced, mutually beneficial, multi-sectoral bilateral trade agreement. While both sides are working to conclude a deal at the earliest, there is still work to be done in terms of reaching a common landing ground on the average tariff rate. The US side has now confirmed that they have received the best ever offer from the Indian government. Responding to a question during a Senate hearing, the USTR Jamieson Greer said that India has been a tough nut to crack and there has been resistance in India to importing certain crops, meat and dairy products from America. But Greer said that India has been forward-leaning in talks and has given the US a very good offer. President Trump's recent threat to impose additional tariffs on Indian rice and US pressure on India to open up the agri and dairy products market could add complications to the ongoing talks. India has been very clear that no concessions can be given on agriculture and dairy. Let's see if the two sides are able to conclude a trade agreement by the end of this year. While trade continues to be a difficult issue in the partnership, the US is looking to deepen cooperation with India in defense, energy, technology, space and trusted supply chains. This was emphasized by the US government during the visit of Under-Secretary for Political Affairs Alison Hooker to India.
Parikshit, thank you for that update. In fact, let's listen to Jamieson Greer, who touched upon the ongoing trade talks with India during the Senate committee hearing.
India is one that comes to mind, particularly for grain sorghum, and yet it's such a difficult country to crack. What is your plan? How do you overcome the?
I have a team over there right now as we speak in New Delhi working on this. There's resistance in India to certain row crops and other meats and products. They're, like you said, they're very difficult nut to crack. I agree with that 100%, but they've been quite forward-leaning. The type of offers they've been talking to us about have been the best we've ever received as a country. So, I think that's a viable alternative market.
Flight disruptions continue across airports this morning, even as Indigo cripples back to normalcy. The government, in a fresh order last evening, stated that 10% of the airline operators' flights have been curtailed. Indigo CEO Peter Elbers, however, claims that their operations are stable and the airline is back on its feet. This even as over 400 Indigo flights were cancelled across the country yesterday. Meanwhile, SpiceJet and Air India have announced they will deploy additional flights to bridge the supply gap due to these disruptions. SpiceJet is expected to run 100 additional daily flights during the current winter schedule. Air India is mulling on adding 60 to 70 flights per day. All of this comes after disruption in Indigo's operations saw over 6,000 flights cancelled in a week, leaving nearly 9 lakh passengers stranded across airports. The DGCA has asked the airline to submit a revised schedule by today. And on that note, it is time for us to head into a short break, but more news and updates coming up on the other side. Stay tuned. Welcome back. You're still with us on Business Lunch. The market's still in the red, but the Nifty managing to slightly go above that 25,800 mark, but more pain seen across the broader markets. But moving on, Microsoft and Amazon, two of the world's biggest tech giants, have unveiled their India investment plans, and the plan is to reshape India's AI, cloud and digital economy over the next decade. Rachna Dhanrajani joins us now with more of those details. Rachna?
That's right. Two massive investment announcements from the biggest of the tech. First, Microsoft. Now, we know that Satya Nadella is visiting India. He's met with the Prime Minister. But the company has also announced a $17.5 billion investment. It is their largest in Asia. And it's particularly aimed at driving AI adoption at population scale. Now, this comes on top of the $3 billion that was announced this year, and taking the entire total of their India commitment to about $20.5 billion. The company will also stand up its largest hyperscale data center region in Hyderabad by mid-2026. We're in end of 25, so that'll be very soon. Now, this will expand its existing cloud footprint and double its AI skilling target to 20 million Indians by 2030. Microsoft is also integrating advanced AI into platforms like eShram Portal and the National Career Service to reach 310 million informal workers. It will also be rolling out India-specific sovereign cloud solutions. At the same time, Amazon is deepening its own decade-long India investment story as well. A Keystone report now shows that the company has already deployed nearly $40 billion in India since 2010. But now Amazon plans to invest over $35 billion more through 2030. The investment comes with a sharp focus on AI-driven digitization, strengthening logistics and export pipelines, and job creation. The company is targeting 1 million additional job opportunities. It is also planning to raise cumulative e-commerce exports to about $80 billion, bringing AI tools to 15 million small businesses and introducing AI education for 4 million government school students. Together, these twin commitments mark a turning point for India. And it isn't just now that we're participating in the global AI revolution. In fact, now India is positioning itself to help shape the global AI revolution. With cloud at scale, sovereign systems, and millions entering the AI workforce, India is clearly moving from being a major digital market to becoming one of the world's defining AI economies. Now, as I said, Satya Nadella is in India. So let's also hear out what he said at the keynote that he did in Delhi, where he announced the big plans for the country.
Data center capacity that is coming live. We already have stuff in Pune and in Chennai and Mumbai. And we're very excited of the India South Central, which is in Hyderabad, that's going to come up next year. And so this is going to be the next big data center region for us, which is going to be scaled very rapidly. One of the things we're very proud of is its 100% renewable power. We're also excited about that Copilot now has all of its data processing happening in India. So it's no longer about any of the data going outside of the country. So we have local data processing happening for Copilot. So that's another big step we have taken to ensure the sovereignty of all of these services. I had a chance to meet Prime Minister Modi yesterday and discuss our excitement about, and it's fantastic to see this all landing and ultimately being able to parlay these tokens per dollar per watt into all of the application systems that are going to get deployed broadly across the country. And so the $17.5 billion, which is the largest investment we have made in Asia to date, and so we're thrilled about it. And so we have now we are committing to skill 20 million people across India in AI skills.
Satya Nadella there with the major announcements made by Microsoft. Take a short break. More news and updates follow on the other side. Welcome back. Now, the surge in silver prices has continued. The metal is now up over 110% this year, and this is driven by multiple factors. Manisha is here with all of those details. Manisha.
It has been 1 year that we have seen silver prices kind of double up and more, 110% up for silver in this year in the dollar terms, and in the rupee terms we are up by 120%. 4% of gains in the overnight markets have brought silver back yet again to all-time highs, and markets are looking at various reasons for silver reacting the way it is. One is the dollar index, which has declined by 8.5%, supportive for many of these dollar-denominated commodities. The second is that the US has added silver in the Geological Survey list of critical minerals. That led to that sentiment boost as well. And then you're looking at also market focusing on Section 232 of the US Trade Expansion Act. If that does come into being, then you're looking at silver going further higher as well. It also is about inclusion of silver into import dependence. We also are looking at imports, rather the industrial demand being quite strong. It also is about the physical investment demand, which is at record highs in this year. And then the supply deficit that silver has been looking at for 5 years could continue into a 6th year as well in 2026. So when you look at the global ETF inflows as well, those have been on the stronger side as well. In the month of November, you saw 487 tons invested in silver ETFs. This month in December, it already has crossed 475 tons. So strong buying coming in even at these current levels. Now talk about the outlook for silver in 2026, and that continues to be quite bullish. Most banks tell us that silver will continue to outperform gold in the next year as well. Citi's put out a target of $70 an ounce. You have Bank of America, Goldman Sachs talking about $65. JPM is slightly bearish at $56 an ounce, but UBS is given a good $10 range, anywhere between 55 to 65. And then you have the Indian brokerage houses, SMC, Motilal Oswal, putting silver targets to $75 to $80 an ounce on the higher side, while Amrapali Group says 75 next year is a possibility, as much as $100 an ounce of a possibility as well in the next 2 to 3 years.
Manisha, thank you for that. Almost double now, more than double this year has silver showing up on stocks like Hindustan Zinc as well. Take your leave on this edition of Business Lunch. Arundhati and I say thank you for watching Midcap Radar. On the other side, we leave you with the Nifty almost in positive territory.